21 on the call. Really, thank you for staying true. All right, so without wasting time, okay, Mr. Sam, can you make me co-host so I can share my screen?
Yeah, of course. I already stopped sharing, sir.
Okay. So I think I'm still having issues sharing. Can you just make me co-host so I can share? All right, so I am really going to be sharing some stuff with us tonight, and it's not his call, he's a brother to we all know him as Coach Charles, but I call him Charles. Right, he's a very wonderful trader, and I think that for many of us that were on the call yesterday, it was a great time. Yes. All right, thank you, Mr. Samuel. It was a great time, learning on liquidity and introduction to smart money concept and the likes. Okay, so without wasting time, we're just going to go right into what we have. All right, so please let me know when you can share my screen. So I like when everybody's fired up, right? So I would like to get a lot of fire emojis, so we can know where we're starting from. All right, so you can all see my screen, yes? Okay. All right, so please let me know when and if you can see my screen. All right, I think I'm seeing some messages. All right. I like the energy. We can raise it up. Yes. Let's go, guys. All right, so I'm going to be talking on entries, how to get entries, sniper entries. So let me get right into it. I'm sure Coach Charles taught us on liquidity yesterday. I believe he taught about internal and external liquidity, right? If I'm correct. So I need people's responses. He taught on internal and external liquidity, right? Anybody? Because I think I saw some screenshots. Dynamic liquidity, static liquidity, and all the likes. Yes, all right, awesome, amazing. I needed to know that so that we can do the same thing. So now, the entry or the trading model in which I use, right? The trading model in which I use is based off of liquidity. All right, it's based off on liquidity. So I'm going to try and just prepare your mind that what you are learning tonight is called ABC. All right, it's going to be as simple as ABC, not too much big stuff, just as simple as it can get. All right, so let's do a bit of explanation. Yes. So yes, we all know that for a bullish structure, one C price creates a series of higher highs, right, and higher lows. Okay, and then for a bearish structure, one C price create a series of lower highs and lower lows. All right, and then I think break of structure basically foundationally, is when price takes out the last lower high. All right, then we have a break of structure. Okay, that's in a bearish scenario. But in a bullish scenario, once the price take out, right, the last higher low, okay, then we can have a break of structure. All right. Now, please follow me carefully. So I haven't learned that now. Okay, so I think discount. I'm supposed to teach on discount and premium. But please follow me. Now, let's do this first. So in in a bullish scenario, when you have this, all right, there's something we call trading range. I don't know if it was taught, but there's something we call trading range, all right? And your trading range is your most recent swing points, all right? In the case of this bullish scenario, this is the most recent swing point. This swing low, and then this swing high, all right? So this currently is our current trading range, all right? The most recent swing point, okay? Now that's our trading range. All right, beautiful. Now the opposite we have for a bearish scenario, the most recent lower high and the most recent lower low is our trading range. Now in your trading range is where you have a premium and a discount. Now what's the idea of a discount? Now for example, imagine that I know a lot of people love iPhones and then Samsung, okay? So imagine that when, let's say, iPhone, let's just manage iPhone 13 first came out initially. So let's take an arbitrary example of iPhone 13 initially came out and it was pegged at a price of say 890,000. All right. Now, what would you really be looking out for as a rational person? All right, as a rational human being, what you're looking out for is for the price of iPhone 13 to at least come down so that you can buy. All right, sometimes what we call promo. All right, so it means that you are expecting price to come a bit down, maybe let's say 800, then you can buy, or even come down to 750, then you can buy. Why? Because you would make much more profit, or you save much more money when you buy at a lesser price. Is that correct? Now the same idea is brought into the forex market, and so when we are talking about discount sorry, pardon me. So when we're talking about discount, what we mean is that we want to see price retrace a bit and come lower, so that by the time we are buying, we're going to be buying with much more profit. Now it makes sense. It doesn't make sense for me to, when something is at 890, then the price increases to, let's say, 990,000 naira. If I'm buying at 990,000 naira, am I really gaining or I'm losing in that sense? I'm not really gaining much. All right, but when I can save up a whole chunk of say 100k off the 890, all right, it means that I can say that, oh, I saved the 100k. I was able to save 100k beyond what you guys bought it for. All right, so that's what we are looking out for. That's what we mean when we say we want to see price in a discount zone. We want to see price come to a zone where it's lesser. We are buying at a lesser price, so that we can now take price higher. We can join price higher. Now, if you are buying iPhone 13 at say 750, and then the price shoots up to, let's say, 990,000 naira, you have gained a whole lot. Now, let me use Bitcoin for example. I was sharing with some people today, and then I was saying there was a time when one BTC was 30,000 naira. Now, imagine that you bought one BTC then, or let's say you bought two for 60,000 naira. Currently, you would have gotten, times 100, all right, of your 60,000 naira, because one BTC now is around, I think, $63,000, and let's just peg it at $1,000 exchange rate. You have gained 63 million naira just from 60,000. All right. So anybody that wants to buy BTC now, what's the rational thing for you to do? Allow BTC to come down, then you buy, so that when it goes up, you can make more profit. Is that correct? So that's the same idea with the discount. All right. So when we say we are looking at price coming into a discount zone, it means that we want to see price come lower, so that we can then join the ride to an higher price. All right. And then if you're talking about premium zones, what we are really looking at is we want to see price. Okay, for instance, now if I bought, let's say, okay, I already bought my iPhone 13 for 890k, yes, and I want to sell it. Do you think I'm going to make money if I sell it for 790? No. What would I be doing as a rational human being is to at least sell it for maybe 900 or 910, add extra 20k to it. So it means we always want to sell at an higher price, not a lower price. All right, that means that if you want to sell in the forex market, you want to sell any asset, any pair in the forex market, you want to see price come higher so that you can then write it down to make more profit. That's the idea of the premium and the discount zones. All right, I hope we are getting a lot. I hope this thing is making a lot of sense. Permit me to break it down so that you really can understand. Okay, so in the bearish scenario, we have premium zones. In the bullish scenario, we have what? Discount zones. All right, we have discount in bearish. Sorry, we have discount in bullish, and we have premium in the bearish scenario. All right, but that's really not what I really want to look out for. All right, so now how do I know my premium and my discount zone? Now, in the case of a bearish scenario, I need to use my Fibonacci and draw my Fibonacci from the swing high to the swing low. All right, from the swing high to the swing low. In the case of a bearish scenario, and now my premium zone is anywhere from 50% and above. That's where a premium zone is, anywhere between 50% and above. 50% is equilibrium, but anything above 50% is your premium zone. In the case of a bullish scenario, right, anywhere from 50% and below is my discount zone. So when I'm saying, okay, I want price to come into my discount, first things first, I must be able to mark out my trading range. So you see that the knowledge of your trading range is very important. That's why we started from structure. If you don't even know structure, you can't know trading range. If you don't know trading range, you can't know your discount. All right. So when Mr. Samuel, aligned or arranged these topics in this order, it was very intentional so that we can build precept upon precept. All right, so now I've found my trading range. What I need to do is bring out my Fibonacci, draw out my Fibonacci. If I'm in a bullish scenario, I'm looking at price coming into anywhere from 50% and below before I even think of looking for a buying opportunity. See, if it is not in 50%, I don't care. If it's not in 50% and below my discount, I don't care. In fact, price can give me sweet entry. I don't care. I will not chase that kind of trade. This is one of the things that helps me filter my trade. If it's not in my discount zone, I'm not paying attention. I'm going to do other stuffs. All right. So please, there's a place I'm going. I really hope I can finish on time, but let me rush. So that's the idea of what a premium and a discount zone is. All right, I hope you understood all to that point. If you understood all to this point, please can you drop some fire emojis? Let's drop some fire emoji if you understood to this point. Wow, we are 28 on the call. That's amazing. That's amazing. That's amazing. That's amazing. Beautiful. All right, awesome. All right. Okay. Thank you guys. Thank you for that response. We are following. Okay, so now let's go into the main course of the menu. This is just desserts. This is just an appetizer. Let's go to the main course. So remember I said that my trading model or my entry model generally is based off of liquidity. All right. Now, what do I mean? Coach Charles taught on internal and external liquidity. Now, basic understanding of structure is higher highs, higher lows, higher highs, higher lows, right? Now, and then we know that, okay, our internal liquidity is anywhere within our trading range, and then our external liquidity is above, outside. But looking at structure from the perspective of liquidity, all right, there is something different, or there's something slightly different that we now begin to pay attention to. Now, we now begin to pay attention to our most recent higher lows in a bullish scenario. All right, and the reason why we are paying attention to our most recent higher lows in the bullish scenario is because our most recent higher low is internal liquidity, meaning that, all right, let me put out some rules here. All right, for internal liquidity to be taken, that's the rule of internal and external liquidity to be taken, right? external liquidity first has to be taken. All right. Then after external liquidity has been taken, then we can come for internal liquidity. Does it make sense? Right? Now, so that's the rule. Now, if you're now looking at structure from the perspective of liquidity, and we are saying that somebody's eyes is about to open, and we are saying that the higher low now, the most recent higher low, or every higher low in the case of a bullish scenario, is your internal liquidity. What does that mean? It means that price must come to take what? Internal liquidity, right? And then go back to take external liquidity. Now, this is how it works. How many of you have ever noticed that you have drawn or you marked out your structure like this? Okay, and then you mark out your higher low, all right, potential point of reaccumulation, okay, and then you just see that price is going to do a stuff like this, take you out, and then reject from somewhere around this area, and then still go back to it, your take profit. I'm sure many of us have. And then we say manipulation. Oh, derivative, for us that trade synthetic very well, we say, oh, derivative and manipulation, Jesus and all of that. It's not manipulation. It's because when you're looking at structure from liquidity perspective, your internal liquidity is your higher low. And let me write another thing for us here. My goodness. Price is liquidity engineered. Meaning that price is driven by liquidity. Price is what? Is driven by liquidity. Please humble, relax. I'm going to clarify. All right. So price is driven by liquidity. Everything that is happening in the forex market is price moving from one area of liquidity to another area of liquidity. That's everything. If you can't identify the liquidity, you become the liquidity. All right. So when you know that price is liquidity engineered, it means that our higher lows in the case of a bullish scenario, right, are our internal liquidity. So price will always seek for the nearest liquidity to attack, then it goes off. Are we following to this point? Are we following to this point? All right. Okay. So it's beginning to make sense why some of us have been taking some losses. Okay. So now, another thing, second or third thing that I want to point out to us here is this. Price only does two things. Two things, guys. Two things. Number one, attack liquidity. And number two, rebalance and hold imbalance. Or let me just put IPA. These are the only two things. Don't worry, we'll get into the chart and I'll show you how we are going to put all of these things together. All right. So price does two things: attack liquidity and rebalance and hold imbalance. See, price will always come for an old imbalance or an old unmitigated order block. Those are the two things that price is coming for: attack liquidity, rebalance and hold imbalance. If there is no imbalance, there will be an unmitigated order block that price has yet to mitigate. All right. And this is the reason why, if you study your chart a lot of the times, you see this place that you mark as your higher low potential area for reaccumulation, you will more often than not find an imbalance that is below that place that price will come reject from and then go, or price comes for an unmitigated order block below that your POI, and then price will just mitigate it, boom, and you will see one very funny momentum kicking. It's as simple as that, guys. It's as simple as this, guys. It's as simple as this. All right. So now we know that in the bullish scenario, our higher lows are internal liquidity. Then the question is, what about our bearish scenarios? Now, our bearish scenario, you see that your lower high where you want to sell from. That's why I don't know if some of you follow DAX on Twitter, you will hear stuff like your stop loss is my entry, because naturally you'll be putting your stop loss around this high, and then it will take you out. By the time it's taking you out, that's when some people are just activated. So your lower highs in the case of a bearish scenarios are your internal liquidity. And what is price going to come and do? Attack liquidity, look for one imbalance above or unmitigated order block, and then sell down. See, guys, I'm sure at least 70 to 80% sure that you have seen these kinds of setup. Even today, you have seen it. This is how you get those sniper entries, because you see, once you can get your entry right, the next thing is you will see a momentum push to your take profit. So I don't like when I begin to see sluggish movement, price is just choppy, it's not moving fast. Nah, that's not the move for me. I mean, is this making a lot of sense? Is someone already seeing why they have been taking a huge amount of losses? Is this making a lot of sense? All right. I mean, there's a lot to go on and on and on and on with. So when you now understand this logic, and let me say this is a logic, it is not a pattern. The difference between a logic and a pattern is that if it's a pattern, right, a pattern most of the times is not mechanical. When I say mechanical, it means you really find it hard to replicate. But if it's a logic, there is a replicable process, a certain replicable process to reproducing it time and over again. Excuse me. Sorry about that. So if you are driving, right, and you want to go right, the first thing you should do is what? Turn on your trafficator, then turn your steering wheel. Please give me a minute. All right. So you turn on your trafficator, and then the next thing you do is what? Turn your steering. All right. Now, sorry, hold on a minute. Let me get water, please. All right, sorry about that. Okay, so when you want to turn to right, right, turn on the trafficator, turn your steering wheel. Okay, then your car can turn. That's a process you can repeat over and over again, and you know the result. And you know the result you get. All right. So there is always a story that price is telling. That if you can't tell the story alongside price, you would really be on the losing side. Okay. So let's make a bit of progress. Do we understand? Oh, sorry. Do we understand this now? Do we understand this now? Looking at structure from the perspective of liquidity. Okay. So now let's go. Let's now break down this ABC. So it means that I'm looking at price coming to take out this guy. Sorry. Okay. So this right here It's my internal liquidity. And then I'm looking at something around this area. All right. So now how do I then use all of this to get an entry? Now, I said we're going to learn ABC. So, follow me. We have our A, we have B, and then we have C. So, I'm going to explain all these things, and I will show us a bit of so I'll show us a bit of this. Now, what does my C represent? My C is my external liquidity. All right, and then my B is my internal liquidity. Okay, now how do I know where my internal liquidity is? What really validates this? Or let's start from A. Excuse me. Excuse me, please. Something just. Village people don't want me to share this secret. It's a lie. Share this one and finish. Alright. So now what validates my A to be my A? Listen, please. This is where you need to pay the most rapt attention. My A, what validates my A? Because I can't just pick anywhere on my chart and say, oh, this is my A, or this is where my trading range is starting from. Alright. What validates my A is that I want to see a sweep of liquidity and a break of structure. So please follow this carefully. A what? Sweep of liquidity and then a break of structure. Alright. Now you see this break of structure, you must pay attention to this break of structure. This break of structure must not be sluggish, meaning it must not be slow. Right? It must not be lethargic. I want to see a very strong momentum to breaking this structural point. Alright. And more often than not, 80% of the time, I don't use one singular structural point break. I use two. Alright. Once it breaks above two structural points, then I take it as a break of structure. But you see, I want to see all those long trending candles that you guys see. Right? I want to see those long trending candles. I don't want to see price just be choppy before it breaks structure. No, there must be an imbalance in that break of structure. Once I can find that, then I can mark that place as what? My A. Now, this has happened to some of you. You see break of structure, then price will now do something like this, then go up. You will then mark this place, take you out, wait to take you out. You will see that you say, oh, they've broken structure again to the downside. You mark this place and you'll be looking to sell, only for price to now do what? Price comes back and takes you out, and you will say it's manipulation. It's not manipulation. What happened is this: price swept liquidity, broke structure, then used this as internal liquidity that will be taken at one point. All right, create this as your internal liquidity, then you will realize that there is an imbalance below. There's an imbalance below, right? that price will come back for. So how do I validate this place to be my B or my internal liquidity? I must see an IPA below it, or I see an unmitigated order block below it. That is when it can be valid as my B, as my internal liquidity. All right. And so, of course, this, my C, is what? External liquidity. So back to I don't know who asked the question. Now, we can only come and take internal liquidity except or if external liquidity has been taken. So external liquidity first, down to internal liquidity, then from internal liquidity back to external liquidity, then from external liquidity down to internal liquidity. That's how price moves. All right, that's how price moves. So on this scenario now, what you will notice is now external liquidity has been taken. Price will create for you that internal liquidity. Wait for that internal liquidity to be created. Okay, I wish I could tell us about price delivery scenarios, but internal liquidity would be taken. All right, sorry, will be created after this external liquidity has been taken. Then we can now come to take that internal liquidity. All right, so that's A, B, and then what? C. So now, can you see the reason why we call it ABC? All right, sweep of liquidity, break of structure, internal liquidity, and IPO and old unmitigated order block is below it. Then external liquidity. The same thing for a bearish scenario, guys. The same thing is not hard. We want to see a sweep of liquidity, break of structure, all right, internal liquidity created, and then price will come back for that old imbalance or IPA. So can we go over to the chart and see some examples? Yes. So if you want to take screenshots, you can take screenshots. Let me just give us 1 minute to do that. Take screenshots. All right, amazing. Take screenshots. So I'm taking all of this off right now. All right. Beautiful, amazing. Amazing. So let's look at some things. All right. So I took a trade on crash 1000 earlier this week. All right. Took a 1 to from my entry. I had my entry here. From where I had my entry to where price rejected from or reversed from, that was a 1 to 9. All right. A 1 to 9 is, I mean, what else are you looking for after a 1 to 9? All right. So let's go over it again. Let's start from the beginning. Let's start from the beginning. I mean, you already can see it from my chart. See how this was higher high, higher low, higher high. Price came back, took out this higher low, internal liquidity, and did what? See that strong explosive move to the upside. Okay, so it means that that's where my A is starting from. All right. And then what was the inducement or the internal liquidity that was created? This low right here. Because if you go to a much lower time frame, this would have been a structural point. Okay, price, this is the internal liquidity. And what was the next thing that okay, even before we use that, look at this. Higher high, higher low, higher high. Someone will have said this is a break of structure. Mark out this institutional candle you're looking to sell. It will actually activate you. You know, to take screenshot, sniper entry, only for price to reverse on you. Do you understand? So when you see this is, you will not say this is a valid break of structure yet. Why? Because this is just internal liquidity that price should come and take. And then after price took it out, what happened? see that explosive move again to the upside. All right, see that explosive move to the upside. So it means that this is where the sweep of liquidity happened. This becomes my A. Where was the candle that took out that liquidity? This particular candle. This was the candle. And see how price came back for that candle. I mean, if you were playing the open, if you're playing 50% of the candle, you are still in. All right, but then let's switch. Let's look at this again. Higher high, higher low, all the way. Price came back, took it out, and then pushed up. I mean, this thing is very simple. Once you can find where the liquidity sweep started from, you are on your way. You are really on your way to finding it. And you can realize that there's an IPA below this structural point that price eventually came back from. All right. So now I was waiting for price here again, but price didn't come back to that place, and price can even still come back to that place anyways. But then I'm just deciding to play the most recent range. So let's go. Let's go. So look at this. Look at this, guys. We had a sweep of liquidity. This low was swept, and then this high was taken. All right. So it means that that's where my new A is from. And where is that closest low to this A? This was it. All right. And there was an imbalance below it. This is 30 minutes, of course. So what I did was, I'm going to talk on key levels. I hope I'll say half time, because my entry here was this. This was my entry. This was my entry right there. Just a bit, yeah. That was my entry. So I was playing this key level. All right. And what did price do? Price came back, took out internal liquidity, and boom, price went up. All right. And price went up. Okay, so let's look at gold. I love gold a lot. Come on, you're having to load again. I love gold a lot because this thing it works like magic on gold. Works like magic on gold. You can even do a back test. Works like magic on gold. So while we are waiting for that to happen, okay, give me any other asset on synthetic that you want us to look at, and I will show you that this logic plays out time and again, time and again, time and again. Synthetic indices traders. Okay, we have someone B500, beautiful. B300 step index. All right. So while we are waiting for gold to be golden, let's look at B500. Jump to EU. Me as a person, I don't like EU. I don't know why. I don't like EU as a person. Yeah. All right. So let's start from daily. All right. Always learn to build your bias from the daily or the weekly time frame. I mean, let's not even go too far. Let's not even go too far, guys. Guys, this is daily time frame. What can you already see? This is the external liquidity that was taken. Is that correct? If I switch to line charts, this thing makes sense now, guys. Right? This is my A. This is my B. This is my B, and then C. C came back, take out B to that old imbalance, and went back to take out C. I mean, this is daily time frame, guys. This is daily time frame, and let's now investigate it. Let's investigate it. Let's investigate it. Look at this. This is an IPA, an imbalance, right? We swept this liquidity. If we go to a much lower time frame, you would have seen that sweep of liquidity very, very clearly. All right. Let me even zoom in. There's no need to go to a lower time frame. Let's zoom. This particular candle here would have been that low on the lower time frame. Okay. So this would have been that low. All right. Then we took it out. What was the next thing? Look at how one daily candle was responsible for that push. That long trending candle, leaving for us what? An IPA. Does it make sense now? Sweep of liquidity, imbalance. Did it come back into that imbalance? Yes, of course. All right. Yes, of course, it did. Okay. It did. It came back into that imbalance. And this was that internal liquidity. There was an imbalance below it. Price came back, took it out, and boom, went for the next thing. So I don't know why. Alright, is this making sense? Is this making sense? Is this making sense? Yeah, stop playing, guys. Stop playing. Back test. I mean, there's a lot of back testing that should be done. Let me reload this. So, gold. I mean, you guys are just too cool. I don't understand. You guys are too cool for my liking. Alright, so let's just see this load up. I want to use gold because I love gold a lot. So let's see if that's this is 15 minutes. I really hate it when trading this. Okay, so let's continue with this one. Let's continue with this. Alright. So we are just going to look at a few more examples, then maybe I can just briefly touch on key levels, and then we can wrap it up. I know you guys are spending time here. So I just wanted to use many of the charts that they are asking for, so that it won't be like something I've already marked. You can just see the play out. Just here now. Of course, back tests. I advise back testing. For my guys, I tell them to do a back test of 1 year's data. So in 2024, start from 20. Okay, is my voice better now? I think the network was trying to play a fast one on. All right. So I advise backtesting. I mean, I tell my guys to do a backtest of 1 year's data on 1 hour time frame. See, I don't go below 1 hour. I don't go below 1 hour for entry. I don't, if I will go below 1 hour, maybe 30 minutes. All right. I tell them do a back test of 1 year from 2023 January to 2024 January. Just gather data, back test 1 hour, 4 hours daily, those 3 time frames. And all you are looking for is what? Is A, B, C. Just be marking it out. Back test, do a lot of back testing. All right. My coach wanted to kill us. See, guys, guys, back testing is important though. So let's go to boom. We've seen boom 500. Let's go to boom 300 and just see what we have on boom 300. See daily. Daily. All right. Okay, so what's happening? Why is this? Okay, let me try. I don't know why this is right clicking. Okay, so on daily time frame, yes, see how this was a low. Now I wish I had time, yes, so something is happening to yeah. Okay, so where did the sweep of liquidity begin from, guys? It began from here. All right, if I switch to line chart, right, we see all of this low was swept. Okay, so you always want to be friends with your line chart. Please be friends with your line chart. Let me go to 4 hours so that it can be clearer. All right. Beautiful. See, does it make sense? Look at this. This candle. Where is the B? This. Why? Because this is the low, and beneath it there is an IPA just underneath it. All right. So this is what? This is A. This is B, and then C. Price came back, took out B, and then look at the momentum push to the upside. You know, I said it, there will always be that momentum push to the upside if you get it right. Okay, if you get it right. Now, right here again, this low was swept. So where is our A starting from now? Naturally, our A should start from here. Okay, this is our B. All of this IPA, and price came into that IPA nicely and did what? I mean, let's see. Let's even see. If you have your entry around here with your stops, this is a 1 to 4 on 4 hours time frame. Imagine a 1 to 4 on 4 hours time frame. Do you know how much that is? And you don't need to be greedy. 1 to 3 you are out, 1 to 4 you are good. Okay, now after this old imbalance was mitigated, what was the next thing that we see happen? So where's the first liquidity sweep before the POI becomes valid? Do I understand that question? Where is the first liquidity sweep before that POI becomes valid? Okay, so I think if I understand this is the first sweep of liquidity. This area right here. And you must also know that, you see, the sweep of liquidity will not always be picture perfect. All right, but this candle tells me, this particular candle, the way it closed, tells me that there was a sweep of liquidity here. If we mark this guy, let's mark this place, somewhere around here, and go to 30 minutes. So let's see. Okay. let's investigate that. I'm only showing you this so that you really can see it clearly for yourself. I really don't have to come to this smaller time frame before I can find it out. But I want to show also that we can really get and understand it. Okay, so I think this is this it? No, still going back further. Yes. So guys, do you see it? Do you see it? Do you see it already? Do you see it already? Do you see it already? Look at this imbalance. That price came back to rebalance. Guys, this was that our supposed higher low, and beneath it was an old imbalance. All right, so price came into that guy, and look, imagine now, after price came into this, what was the next thing you can see? A strong momentum push away from it. So that momentum push, you always want to see it. So I think I've been able to answer that person's question. All right, awesome, amazing. So going back to now, this imbalance price did not come into this candle, no problem. This is a sweep of liquidity and a break of structure. Haba, this one is even too clean. This is too clean. Internal liquidity. This I was taking. All right, A, B, and then C. C came back to take out B. Rejected very well from this key level. All right, and from here, imagine that I had my entry at the key level. Like I said, I love playing key levels a lot, but it makes me miss trades anyways. No, now Abba. A 1 to 14 on boom 300. That is one lot minimum. Abba, what are you looking for? All right. So listen, guys. Let me summarize it this way. The only setup you are ever looking for is this. This is the setup you are ever looking for. This is that one setup. We will give you a 1 to 4, a 1 to 3, a 1 to 5. All right, that is the one setup you are looking for. Okay, just don't be greedy with it. Just get a 1 to 4, get a 1 to 3. Get a 1 to 4, get a 1 to 3, and you're out of the market. You're done for the day. Okay, so I think this guy is ready for me now. Okay, 2 hours, gold. So I will do that. I will use that to show us. Gold, my love. All right, gold, my love. What do you guys see from here? This is already marked. Let me just give us the time to scan through this. Look at what happened from here. We swept this high, we broke this low, and then this was the internal liquidity. Price came back and rejected. See that long push down again on gold. All right, what else? This now becomes our leg A. Okay, and then price did what? Came back to this guy again. So imagine that in 1 week. Guys, imagine that in just 1 week, these 2 trades were the only trades you caught in 1 week, and then you are done for the week on gold. You are done for the week. Maybe some other times I'll be able to tell us tell us about price delivery scenarios, because we have 2 price delivery scenarios actually. So 1 to 5, 1 to 5. That's in a week you got 1 to 10. So imagine you were risking $5. You have made what? $25, $50 in 1 week. You are good to go. Just when you find that one singular setup. Now go and do a lot of back tests, a lot of back tests, a lot of back tests, a lot of back tests. Can you hear me now? Can you hear me better now? Okay. So I said this is daily. Let me show us this again. Whoosh, guys, this thing can really be simple. Let me switch to line chart. Remember I said you want to be friends with your line chart. All right. So let me delete all of this so you don't get confused. From here, guys, the I, external liquidity. This is where our A is starting from. Okay. This is our C. Where is your B now? The last low before the main low that swept liquidity, or the last I before the main I that swept liquidity. Okay, let's switch back to imagine now. See, so imagine that you had your entry from here. This is Friday. This is January 24. On the daily time frame for gold, you would have been holding your buy all the way to here, and this is my projection on gold. Price should come and take this high. Whatever makes price not take this high, then we are going to break this particular region. Does it make sense now? So now let's even do maybe a bit of projection. So this is my low, right? This is where this last sweep of liquidity happened from. Okay, where is our external liquidity? This this is our external liquidity, right? So we have our A, right? But once you can find this one setup, at least a 1 to 3, a 1 to 4, you are done. You are not looking for too much. Okay, so Mr. Samuel, do I still have time, or my time is up? Let me just touch briefly on key levels. Key levels make my entries and my stop loss very, very small and minimal. Okay, 15 minutes more. All right, I'll just use it to just touch briefly on key levels. So what are key levels? Key levels are those areas on your chart that looks like V shape or A shape. And how do I find them? I switch to my line chart. Now, this area that looks like a V shape is a key level. Okay, this area that looks like an A shape right here is a key level. All right, if I show you the yes, beautiful, this boom 300. Let me switch to line chart. Can you see that this place is a V-shaped area, and that was where price came into and then did what? rejected. Can you see? That was the sniper. That was how I was able to catch the crash 1000 trade. Okay, let me show you something else on VIX 751S. Okay, so I would, yes. Where is that? Okay, let me go to 1 hour and show you guys something. And not seeing my markups clearly. Maybe it's your network. I don't think any other person has that complaints. Maybe it's your network. So I caught a trade on this guy from here. And how did I catch it? Simple. Alright. This was a key level. We had broken 1, 2, 3 structural points. Alright. So my intention was this eye. Okay. This eye. And this, I mean, without marking it up. Without marking it up, guys. Was this setup not too clean? Look at this now. This is the internal liquidity. Somebody would have been looking to buy from there. Alright. And there was the key level below it. This place here, that was a sniper. If I switch to line chart, you would see it. Can you see? That was a sniper. And then we danced around, but eventually came and we took this high. Alright. So you don't use key levels in isolation. You use key levels in alignment with your what's it called? With your directional bias, your market structure. Where is price going to and where is price coming from? I don't have time to teach on that really. But just to cap it up, guys. Start your analysis, build your bias from the weekly down to daily. Your 4 hours confirms it, your H1 for entries. And what are you looking for on all of this time frame? You are looking for where you are that sweep of liquidity, break of structure, all right, internal liquidity, okay, and then an old imbalance or an old order block unmitigated, all right, and then you are just waiting for price to come into your zone, and then boom, you are good to go. All right, so you can now look out for key levels in those areas, you know, to further confirm your entries for you. So this call wouldn't be I mean, I really don't. This is just all I trade now, actually. Those potential area of accumulations and all of those things. There's that. All right. So this wouldn't be complete if I don't give a shout out to the person who taught me all of this, and that's no other person than Fourth Man. All right, he's my coach. He taught me all of this, and you know, I'm really grateful to God. Really grateful to God for, you know, having access to him. He taught all of this, and then that was when everything really became much more easier than it used to be. All right, so my Telegram link, is it my personal DM or my free support group? I don't know, Mr. Samuel. Which one should I drop? Okay, said every. Okay, so let me drop my personal Telegram link and the link to my personal DM. Okay, so all right, so that's that. Then all right, so my free Telegram support channel. Alright, so I think that's that. Although I have a YouTube channel, but many of these things are not really yet on my YouTube channel yet because I've really not had time. Work, ministry, and all of that. But I'm trusting that I would have time to update all of this. All of this. I just sent it through. So let me send it again. Ouch. So Mr. Samuel, I think that I've been able to do a bit of justice to tonight's topic on entries. Yes. Okay. All right. So thank you guys for the time. So I'll be passing the mic back to Mr. Sam. Thank you all.
Oh, wow, please. Thank you so much, sir. Thank you so much. Thank you so much. Thank you so much. Coach Dami, if you are greatly impacted tonight, I want you to drop a 111 on the chat box. Drop a 111 on the chat box. Drop a 111 on the chat box for Coach Dami.